Alright traders, I am back again with another video, and in this video we want to take a look at some Ichimoku trade alerts that we sent out yesterday. We sent out two trade alerts yesterday, um, just before the market closed at 5 o'clock, so not quite 24 hours yet. What we sent out were trade alerts that were featuring trading with Ichimoku, basically the basic Ichimoku setups that you'll see here. So I'm going to go over those trade setups and let you see where we got into the trade and where we are now. So let's look at those right about now. Alright guys, so the first one was the Euro Yen. Just going to go over some basic stuff. So you can see I'm trading that right now. I'm just using a $100 account that I have. So what I did was started this $100 account roughly almost 2 years ago. I think August will be 2 years ago. Basically it was when FXCM shut down. So what I did, I developed a $100 account, and then I just wanted to trade that. So that account stands at now just about $3,000. So the thing about the account is, guys, I developed the account based off of using no more than 2 to 3% max on my on my trades. I didn't use more than 3% of my capital. So my risk was no more than 2 to 3% of my capital. All right. So that way, yes, I could have made a couple big trades by risking way more, but then I could have also blown the account. So being steady, doing the same things, you could see I developed my account almost $3,000. Still got a little bit to go to 3,000, but we'll get there. So the thing that we want to look at is this trade setup. So you could see I traded this thing twice. Now I took a trade last week and lost. I took three trades on this past 2 weeks or so. So I took a trade here and I went long at this point right back here. Well, I lost this trade, but if you watch Ichimoku and understand everything, the market also developed the 1 2 3 pattern that we always talk about. So when we developed that 1 2 3 pattern, it was a 1 2 3 reversal pattern. So with the 1 2 3 reversal pattern, I kind of thought the market would go lower. So I'm going to take you back to let you see what I did on that trade, and then we'll work our way back up to the previous trades. Let's go backwards here, because I got in the market right here. This is where I got into the market, and it's not shown, but these are my entries right there and my exits. But I got in here. Now I got in basically because what we were looking at was a 1 2 3, because the market was showing 1 2 3 continuation at that point, and I didn't know if we had a because I always tell people, like, when we're trading that 1 2 3 reversal or 1 2 3 continuation, that two level is very important. Okay, so it's going to help you to understand and know where and where not to take a trade. So one, when I'm looking at the market, let's back up and see why I took the trade. I didn't count this level here, so I just went 1 2, looking at 3, and then I thought 4 would continue. We would see the market get up into this area or even move up to this point. Now we still may, because the market's probably going to correct itself and then start to move to the upside, but we reversed here because this 1 2 3 wasn't all the way developed, so I didn't know if we were going to violate here. If you violated this level, then that would let us know. Well, I entered at the top here, so when I entered at the top here, I lost this trade down to here, and then the market continued to the next candle. Well, when I got out of the trade, I was out of the trade, and I got into the trade again here short, guys, because there's a lot of reasons. Now the TK crossover was big, but it didn't show the bearish move that I was thinking, and then the 1 2 3 started to show a 1 2 3 reversal instead of a 1 2 3 continuation. You had a flat Kijinsen here, which I was thinking, well, we got some support maybe, but in a way it's kind of resistance now. All right, so what happened here was the market broke Kijinsen. When the market broke Kijinsen, I figured we would see that downside move and the market move down to this level here, because a break of Kijinsen signifies a basic change in direction, and plus the market was also pretty flat, as you could see here. So I didn't really trust all the signals by Ichimoku, because you could see we were having various crossovers, and sometimes these levels don't really hold when the market's trading this way. So we broke this level, and I entered the trade and shorted it, and let's go to the next candle. I'm not exactly sure where I got. I know okay, yeah, so we got to this point, and then this candle, the next candle developed a at that point it was a indecision candle, so I got out the market on this candle right here. And then I waited because now I was expecting to get this crossover here because we failed to break this level here and we started to see divergence. So what I did, I look to see what kind of divergence we had. Went back, used the ultimate oscillator for divergence to see if we had divergence. And as you can see, we have some slight divergence, but not a lot of divergence. So it was really still looking like the market could move higher, but you started to see the market break down because you had a little bit of divergence here. All right, nothing really major though. Matter of fact, it's not really even divergence because these are pretty even. This is even, that's even, this is even, that's even, this is even, that's even, this is lower. All right, and this is a sign of hidden bearish divergence right here. All right, but where we were looking at immediately, we didn't see any divergence. All right, but we did see the market come down to this support and resistance level, which was major. You can see I made it into a zone, and you can see where the market honored that level so many times. So I wanted to trade. I knew that if I broke this level, this was the level I was going to shoot for. Market went there and we hit that target and we were good to go. So then the market pulls back to the top here. We get a little hangman near Kijinsen. We didn't get our crossover quite yet, so I was ready. I believe this was our I think this candle was the April 30th. I think that was our Sunday session that we had. Not sure. I think it was that one or the next day, because we were talking about this trade setup and I wanted people to be aware to get into this thing ahead of time and be ready. Well, then the next thing happened. This is where we saw the crossover happen. So we already had a bearish cloud, all right, bearish TK crossover, bearish Chiku span, but now Chiku span went into this price here. So that was looking like a ranging market quite possibly, but with the rejection of Kijinsen here, so we rejected Kijinsen, had the TK crossover. Definitely want to take that trade there because I don't really trade TK crossovers, but when they're very close and I can keep my stop loss to a minimum, I'll take them, because normally on a TK crossover, price is way up here. You could see where a lot of these crossovers prices way higher than you really want it to be, or way farther. It's farther from the Kijinsen level that you're looking to use as your stop loss most of the time. So I didn't want to, I don't take those trades unless I have a tight one like this. Now I really didn't base this off of the crossover, but the crossover was a good thing. I based this off of the rejection of the Kijinsen here. Okay, so with that rejection of the Kijinsen here, we already set our level. We went back to the 4-hour time frame. We can't go back 4 hour here or we'll lose. So we got into the trade on the 4-hour time frame. This was our entry level here with our stop loss up here. And pretty much based off of the daily time frame is how we made up our mind. We based it off of the daily time frame, and then we entered on the 4-hour time frame. And the next today is what's happening after we put the trade out. Here's what happened. So yesterday it looked like we were getting into a losing trade. The market pulled all the way back up here, but then today it's rejecting even more. So we should see now, what we want to look for is the market to violate this level here. All right, so what I'm going to show you is my targets. So this target, basically you always want to get past your 2 level. So when I'm looking at the 1 2 3 level, I go 1 2 3 4, right? So that means the market's going to continue to the downside. So then 1 2 3 4. I do want to make sure I get past this 2 level. Now when you're looking at a 1 2 3 continuation, a lot of traders trade the 2 level. All right, the 2 level is fluctuation. If you understand Ichimoku, part of Ichimoku and the theories of Ichimoku are wave analysis. Okay, so one aspect is when a 1 2 3 pattern is just an N wave, an Ichimoku N wave. All right, so that N wave, when we talk about fluctuation, it's that 2 level. So in Ichimoku they don't say this is the 2 level, but that's what I'm telling you. all right, because it's the 1 2, so you're at the V level with Ichimoku. This would be your V level, and when you're at that V level, that's fluctuation. Okay, that's the fluctuation level. So then the market pulls back up, and when we're looking at Ichimoku, we're talking about this price here. We're talking about the chart. We're not talking about all of the indicator now, because now we're going off the chart to get more advanced into the price of the market, price and time and so forth. Now I'm not going to get into the advanced Ichimoku concepts right now, but I'm just showing you that yes, this is an N wave and it's continuing to the downside. When I look at the market, when you look at a 1 2 3 continuation or reversal, you're just doing a little bit of a part of advanced Ichimoku that you probably didn't know. So Ichimoku uses waves, and they're N waves, and the market moves in wave patterns throughout this whole time, always. So when you see this 1 2 3 develop, you want to understand if it's a 1 2 3 continuation or reversal. In this case, I looked at the 1 2 3 continuation to move higher, but the reversal sign came in. I took the loss here, and then I got back into a trade here, and then I profited here, and then got back in here. So we had the one. So let's start this over. I'm going to draw it out for you so you understand what I'm looking at. So I said 1 2 3 and then 4. Basically we're saying this 1 and 2 leg is the same as 3 and 4. Now that looks a little bigger, but anyway, we're gonna measure it in a bit. So then we went 1 to show this next trade, 2, and then we always want to enter at the 3 level. People are going to ask me, how do I know where the 3 level is? There's a whole bunch of ways I know where the 3 level is, but number one, usually it's at a support and resistance level. Number two, we use fractals a lot of times, and then number three, sometime you're not going to know till it develops. All right, so I wasn't sure this was a 1 2 3, and still it pretty much looks like one now. So then you would shoot for 4, which will be down here somewhere. So that would be where our target is. So this is our first target. You always got to get past 2, which is that fluctuation level in Ichimoku, all right, when you get into the advanced stuff. So now we're going to look at also how to find our target. We just looked at the one support and resistance level. Now we're going to look at, let's go with these fib tools. So when you get into the trade, you go 1 2 and you go 3, and you look for the market to come to 4. The 4 are these levels here. All right, so this is one of our levels. All right, and this is our final Ichimoku level, and this is where you could see the market went to. Now this level right here in the blue area, that's the 1-to-1 ratio level. That's where the market does a 1-to-1 move. Okay, so then what I look at is 1 2 3 4. Now this is the trade we're in now, so we want to see where our target would be. We would say basically 1 2 3, and then our target would be down here at 123 310, which is the 1-to-1 ratio move and a nice N wave in Ichimoku. Okay, so that's something that we would be looking for, and that's where our target would be. Now we also know there's a strong support and resistance level right here, so we know we got to get through that, and if we can get through that, then we shoot for this target here. All right, so that was the trade, and is the trade, and continues to be the trade right now. Pretty basic how we traded this one, looking at your crossover and all the signals and bouncing off of Kijinsen. All right, and then with price action to help you to get into the trade, and then go into your 4-hour time frame to get a better entry, making sure of divergence at the level. Just a couple things. Now traders always believe it's the trading system that helps them, that makes them a better trader. It's not the trading system that gives you the trades, the winning trades. It's you, it's your mentality that gives you the winning trades. So you can't ask me how many pips you'll make, or how much you'll make, or how many trades you'll win, or how many do I win, or how many do I lose or win, or how much do I make, because I might make more or less than you based off of a couple things. One of them could be maybe my mentality is a little stronger, where I'm not taking bad trades, I'm not breaking rules and taking trades that I shouldn't. If you're breaking rules, then what good is the rule-based system here that we're using, right? So then that's where the discipline and the patience comes in. Maybe I have that and maybe the next trader doesn't. Maybe the next trader has it and then the other guy doesn't. So therefore they're going to have different results. We could all trade the same thing and we'll all have different results based off of people not doing what they should be doing. If we all followed the rules, did the right things, and did what we were supposed to do, we probably would get a lot of the same results. But at this point you won't, because so many people do the different things. So you can't base anything on what I'm doing or receiving and say that's what you will get or should get. You could, but it probably won't be. So let's go to the next one, which would be the Euro USD. Let's go look at that. All right, guys. So let's go here. We're looking at this trade setup with the Euro USD. This was a trade alert we sent out yesterday, just based off of some easy trading. Very easy trading. So when we had our session Sunday, one member pointed out that we had a descending triangle pattern. But if you look, guys, the market, Ichimoku follows the market pretty well. So you get good bounces off of your Tenkan-sen and Kijun-sen levels. All right, so when the market gets flat and starts acting crazy, you miss out on some opportunities. But then you could see it where we had a nice bounce here, a bounce here. Now here you had a bearish engulfing and the market dropped. Then you were flat because you were crossing over Tenkan-sen and Kijun-sen many times. And then you didn't really understand what was happening here because we were just starting to break out of this move. But then the move, you could see we broke the level, we broke down. Then you bounced off of Kijun-sen again right here. Easy trade setup. Now here the market went up to the cloud, basically up to your descending triangle pattern top, right? But then the market shows you another bounce off of the Kijun-sen level. So during this trend, you can get some very nice bounces off of the Kijun-sen, Tenkan-sen levels for trade setup. So those are easy basic trades that you could see and do. All right. So those will help you to catch some profit when the market's moving. You'll know where to get in because you're going to be getting in with the strength basically because the strength of the market is to the downside here, right? Well, where are we going to catch the trade? We're going to catch the trade on the correction at the end of the correction, supposedly, because we're going to use these levels. So we always trade levels. We're going to use these levels to help us to decide where we want to look for profit. Once the market gets to where we want to look for our entry. Once the market gets to our levels, then we start to look for that price action to get into the trade. So we use our basic Ichimoku levels, basically the Tenkan-sen and Kijun-sen most of all, sometime the cloud. But then here's how we got into this Euro Yen trade. This was this Euro USD trade. This was a very easy trade. So we already bounced off of Kijun-sen up here, and the market's continuing to move in a downward direction. So we want to look for the bearish trade, the bearish move. So where would our next trade be? Well, when the market was down here, we already know we're looking for the market to pull back up to Kijun-sen. Sure enough, it pulled right back up to Kijun-sen. Now we would have thought it would pull to Tenkan-sen or Kijun-sen. So when it pulled to Kijun-sen and we rejected just like this, with a big rejection like that, we're definitely looking to take the trade. So we placed our entry here. Now I didn't get this one, but I sent this out to everyone. So this is the entry here. We started off with a losing trade. The market rejected Kijun-sen again and then dropped. Now again, this is our 2 level because you have 1, 2, 3 now, and then 4 should be down here. We need to break 2. We need to violate 2 for the market to break out of that fluctuation level. All right. So basic easy trade. Stop loss was up here, but now I don't put it way up here because this was an 81 pip stop loss. Now, yes, I could afford it, but I don't want to give the market that much room to come back on me. So I'll cut it in half. I'll use half of that wick because if the market's going to come back this much, usually the trade's not going to work out. All right. And I'm not going to really give it all of that 81 pips. Now, you could have waited 81 if you could afford that and let that thing try to go back. But once it moves but so far, you kind of understand and know that the market's not in your favor and what you saw is not going to work. So this was a basic simple trade. You all know about rejection candles, these big rejection candles. Whenever you see them rejection candles, they're good trades right here. You could see another one here, some other ones there, a rejection right here. When you look at those rejection candles at levels, those are helping you to make good trade opportunities, good trade setups. So that's the trade that we had, these 2 trades, and both of them look pretty good. Look like we may get profit down to this area and then see if we continue further. So if I'm looking at Ichimoku and I want to get into where my target is based off of Ichimoku, I'm going to go, and I have these numbers set different than you would have yours set. The only one that we definitely would have together are the 0 and the 1, the 1.0. That's going to be your 1-to-1 fluctuation level. So this is where the N wave should develop, right? All right, so this is where you would look at the 1-to-1 ratio level at about 1.10553. That's where our target is. Now we need to get past that 2 level. As I explained, we always need to get past that 2. And if we could get past 2, then we start to shoot for 4. So I'll draw it out for you. Basically what you see here. 1, 2, 3 continuation, 2 and 3. And then we should be seeing 4 down here, which would be 4 down here. So that'll be a 1, 2, 3 continuation because we go to the downside. So a 1, 2, 3 reversal would take us up to this side because we would break 1 and we would never break 2. So that would mean the market moves down, because this would be, so let me erase to show you what I'm talking about. So this would be, if we were doing that, this would be 1. Let's say this is 1. This would be 2. Then the market would go 3. And then it would fail to violate this 2 level. And then if it violated this level here, which would be 1, 2, 3 at that time, this would be a 3. If you violate 3, you know which way the market's going. But when the market comes down here, now you're going to start to count. So for that reversal, once you break 3, so that's 1, 2, 3, which would be this level. If you broke that level, so if the market came down, pulled up here, dropped a little bit, and then broke, then we know we're seeing that 1, 2, 3 reversal, right? And with that said, that 1, 2, 3 reversal would be breaking this level without breaking this 2 level, and the market breaks there, and then we start to know. So now then we would start our count 1, 2, this would be 3, and then 4, right? And that would be the 1, 2, 3 this would be the 1, 2, 3 reversal opportunity. Now that doesn't mean it's a trade. It's helping you to understand where the market structure and which way the market's going. But this is basic trading, easy basic trading, nothing hard with these trades right here. Nothing, we haven't used anything more advanced on this trade, 2 trade setups, than except just knowing and seeing where the market is and understanding where to get in and how to get in. That's all this was. So I would like you to be able to become a member if you would want to, and learn this stuff, understand this Ichimoku inside and out, understand the 1, 2, 3 continuation and reversal, understand price action, support and resistance, fractals. We use fractals like crazy. So some of the stuff that I didn't explain everything about a fractal trade, which was the first trade we took. I didn't even explain anything about the fractal level, because fractals are so important, and I think that every trader should know fractals because they help you to determine and understand your market bias, the direction of the market structure, basically. All right. So yes, look at right up here. You can see talking about www.fx@oneglance.com. Look at my website. Check it out. Got some free stuff on there. Plus I'm enhancing my website because I'm going to be adding some stuff. So if you want to become a member, and even if you don't, right now I do still have a free course online. It's about Ichimoku. Just go to my website and you'll see that free course. But if you want to become a member, you get these trade alerts along with weekly webinars that we hold. So definitely every Sunday we have a webinar, and it lasts about 2.5 to 3 hours, talking about the Forex market. And then we're trying to keep up with our talking about stocks and also cryptocurrencies. So those things are the things that we look at. Those are the things that if you become a member, you have an opportunity to learn. I'm not going to sit here and tell you you're going to get 100% return and all these crazy amounts of numbers, and you're going to win this much and you're going to do this much, because I want to be honest with you, because no, you're not going to get that. Not everybody is. There are some people that will get those kinds of things, but the average and the true thing, to tell someone that, you're basically falsifying that to them. They're probably not going to get that kind of return, but you could get a nice return if you're trading properly, doing the right things. Yes, you're going to lose and the market does its own thing. But to be realistic, guys, a lot of people go out and see these people posting things about 100% return, guaranteed win, this and that. They can't guarantee you no wins, and they just trying to draw you in to get your money. so that you join their services. I'm not trying to draw you in with false hope. I'm trying to give you the true idea of what you will get. And when you purchase my membership, you get all of our courses. Just starting a new stock course online now, and we're also moving our website over to another section where we're going to have some better opportunities for you. So that's how we looked at those trade setups. Pretty basic, nothing major. Hope that helped you out. And guys, think about becoming a member. Visit my site, as you can see up here, www.fxatOneglance.com. Till next time, guys, hope you enjoyed it. God bless.